and gentlemen, a very warm welcome to all of you on Business Today Television. Amongst the most awaited IPOs for 2025 is ICICI Prudential Asset Management Company, which opens for subscription on December 12th. All data is known, it's running via graphics on the screen. Let's discuss more in detail about this IPO. Joining us on the show is Mr. Nimesh Shah, MD and CEO at ICICI Prudential Asset Management Company. This company was set up in 1993. So it's a 31-year-old behemoth, which is now coming for listing. Namaste, Nimeshji, and a very warm welcome to you, sir. The
Thank you.
entire amount is OFS, which
Correct.
essentially means that the money will go to Prudential, which is reducing its stake to 39% from to 38% from 49%. Could you please justify this very heavy price that you've put on the OFS issue?
The justification of the price, mine will be a very biased view, so it is better that you do it. The analyst in you should look at it. I can tell you what are the business variables that we look at and how the business looks like. I should focus on the business and let the analyst talk and the investor think about the price. I can say that should we discuss the business first or we discuss the price first? I can discuss either ways. You want me to? I find without talking about the business, if I talk about price, it would look a bit odd.
Okay, because you are the guest, let's go your way. Why don't we discuss the business first? For all those viewers who came in a little late in the world of equities, ladies and gentlemen, let me tell you, one of the finest blue chip AMCs ever to grace the mutual fund space has been ICICI Pru. They have literally a dozen or more funds which have been in the limelight over the last 20 years. They have created a lot of wealth for long-term shareholders and even now remain the first port of hold for quality investors looking to create long-term wealth on Dalal Street. Nimeshji, beyond this, it's over to you.
So I think this industry, before I go to the company also, I think this industry has been brilliantly regulated and brilliantly regulated by SEBI, and that is why we have created what SEBI has essentially done is create a very pure product for the final investor. Since the product is very good for the final investor, he is getting a transparent product with minimum charges possible, and which are completely monitored by SEBI or controlled by SEBI. So you can have a debate whether my margins are enough or not, or whether the distributor earns enough or not. But there will never be any debate on whether the product is right for the final investor. With what has happened, that the investor has had a very good experience, and because of which a product from a push product, it has become a pull product in the industry. So that is the beauty of this industry, whereby we have got a very healthy SIP book. Say in ICICI Prudential per se, if I give an example, around 9.5% in a year, I can grow. This company can grow only because of the equity AUM of this company will grow by 9.5% every year, only because of the SIP number.
Okay.
So SIP plus STP put together and you multiply it by 12, whatever hits my account every month, and you multiply it by 12, almost 9.5% growth is achieved by that itself. If I don't sell anything, and the SIP itself will give that much growth. Point
Okay.
number one. Yeah.
Nimeshi, what is the monthly SIP that is coming into ICICI Pru AMC each month?
We look at SIP plus STP, that is the systematic transfer plan, both together is around 4,800 crores a month. If you see the September number, it is on September, it would be 4,800 crores. So I'm saying there is a natural growth that happens because of this number itself. Plus, we are in a country like India where the nominal growth is 10%. So it is up to your or my judgment as to in the long term what can be in a country which grows nominal at 10%, what kind of growth should the top corporates of the company expect. If the top companies grow in that manner, then because I have sitting on 6.5, say ICICI Prudential has got sitting on 6.5 lakh crores of equity. So you grow because there is a mark to market also. If the market grows 10%, my equity AUM goes also 10%, my revenue also goes up that way, right? So
Fair point.
the growth, the growth in revenue in this industry happens because of two reasons, because of sales or because of mark to market. And sales is automatic in the form of SIP also. So there is a very good driver for growth in this industry over a period of time.
Nimeshji, this is all accepted, and we've had the pleasure of looking at your financials for Pro ICICI AMC for many, many years. There is absolutely no doubt in the mind of any investor at all, whether new or old, that it's a marquee brand that is getting listed. The only issue is how do you justify the price that has been put on the FPO? Uh,
Fine.
Oh, actually,
So I
the
have
OFS.
So we discussed that the industry is growing well. If you see the last 2 years growth rates, one of the factors that you decide the valuation is based on also how it is growing. If you see the last 2 years, which is mentioned in our DRHP and which I can talk about, is that it was almost growing more than 30% per annum. Whether the top line look numbers or the bottom line numbers, they are growing at more than 30% per annum. And this is a very beautiful business where there is no capital required. So I don't need capital to grow. Very minimum capital you require only to the extent that SEBI says that you skin in the game, you have to invest in your own funds. To that extent only this company requires a total requirement of capital by managing almost more than 10 lakh crores of asset is 1500 to 1600 crores, which is actually going into the investment in the funds. So to that extent, we are a very capital light industry, a capital light industry which does not require capital to grow, which pays a dividend payout of the last so many years has been more than 75%. Even in our DRHP we have stated that we will pay more than 60% minimum we endeavor to pay. If all the circumstances are normal, we'll pay more than 60%. So high dividend payout, high growth, the profit growth in the past has been good. There are a lot of drivers which says that the industry can do well in future also. We have got a market share of around 13.6% on the equity space in the market, which is actually the indicator of the strength in the retail business. And plus a low capital required. That means I can grow without increase. So look at any industry where capital is not required and there is growth, the P ratio tends to be very high. So if you compare it with my peers also, the operating profit, this industry should be measured by operating profit and not PAT, because PAT is a function of other income also. So if you look at operating profit of this company vis-a-vis any other company in the industry, you will be able to look at the valuation numbers.
I
The
agree to
operating
most of
profit,
your points, Mr. Shah.
operating profit market share is around 20% of the total industry profit. 20% of that is made by ICICI Prudential, and that number has been growing in the last 2 years, if you see.
Right.
Right, so
Mr.
that's where
Shah,
there is a growth of the industry, which so even if you look at, please check with my peers what are the valuations that which they are going and what is my operating profit vis-a-vis a peers operating profit. That's how it I look at this business.
Mr. Shah, you will appreciate that this is an interview that I'm doing for Pro ICICI. I wish I could get the CIOs and CEOs of other AMCs on the same show. We would have had a wonderful discussion. But for the
No,
moment,
no, that
we
is,
will.
I'm just saying, you asked me the justification for the this one. How did we go about it? So we went in the, we understood where our strengths are, where our profit numbers are, where our operating profit numbers are, vis-a-vis the rest of the industry. And I'm telling you that. So it's a, whatever I've told you is data. I have not gone beyond my RHP, what has been stated in my RHP.
Absolutely, Mr. Shah.
Hmm.
Let's just take this discussion a little forward. Because you're 33 years young, it's not a newbie that is getting listed. And the financials that your company boasts of is phenomenal. I'm just reading the PBT margin for the benefit of our viewers and potential shareholders, 70.7%. PAT margin is 53.2. That's primarily on account of a large amount of your assets under management being on the equity side. Now, are these numbers sustainable in the coming quarters, the coming years?
See, that's what I was saying earlier, that I believe this industry, the way I look at this industry and the macro numbers of the industry, I look at only one number. Where was the individual investor investing earlier and where is he investing today? 10 years back, around 7 years back, when we started that campaign, Mutual Fund Sahi Hai, this industry had 1 crore customer. Today we have got 5.5 crore customer plus. It is around 5.8 crore customers or something like that. So the customers have grown in the last 7-8 years, and the wealth at that disposal will keep on growing. It has happened in our case also, so it will happen in future also, where the wealth with the set of customers you have will grow. So with that growth, I believe market in India is infinite, because you just look at what are the deposit numbers in this country. I'll give you one simple thing. We were 13% of the deposits in the country 10 years back. Today, the mutual fund industry was 13% of the banking industry 10 years back. Today, it is 28% of the banking industry in a span of 10 years. So, this as a country moves up from 3,000 per capita to higher, the depositor of yesterday will become an investor of today. That's what is happening. So what we discuss as financialization of saving is actually happening in our country. So I believe these numbers can keep on growing. The conversion of traditional products into investments. The young man of today first invests in, his SIPs are starting as soon as he starts earning. So he is investing in capital market, because the number of, so I'm saying there is growth potential that is possible, and ultimately the market values growth.
Right. Let's look at the income that you generate via the direct route, as also through distributors. What is the mix at this point of time? Of course, the direct route started in January 2013. So you have a legacy operation and you have this direct business. What is the contribution to revenue via the direct route, and how do you see it growing, if at all?
See, if you see over the years, the contribution that comes out of direct has been growing. So today, as I'm talking to you, 76%, 74% of our AUM comes from of equity AUM comes from, why I'm saying equity AUM, because equity denotes the retail. Institutional and all is different. So 76% of my equity AUM comes through distributors, and 24% or 74% comes through distributors, and 26% is direct, as we are talking today. So 74% of the revenue comes through distributors led AUM, and 26% comes through direct.
Okay. You would imagine that the direct route as a percentage would start contributing more, given the given the digital space, the new entrants as retail investors are coming in. Is that a hope that resides within you?
It's not a hope. Customer is welcome. Customer decides how he wants to come to us. Customer is welcome into ICICI Prudential from whichever route he chooses. What we have done as a company, we have got this 27-year-old relationship with distributors. So distributors can come. We have got distributors spread all across the country. So there are distributors, there are bank distributors, there are individual distributors. There is a direct route. People can walk into my branch also. People can come on my app also. People can come on my website also. So all routes are open to the customers. I don't decide who comes how. The customer decides whether he needs the guidance of a distributor or he wants to come to me directly. As far as we are concerned, the profitability, whether he comes through a distributor or comes through direct, does not change for us, right? Because direct charge is that much lesser than the distribution charge. So profitability in both the things is the same. So we are okay whichever way the customer chooses to come.
Okay. At the moment, Mr. Shah, you are one of the most established AMCs with a 32-year history. And the product profile is really mature, given the size of many of your funds exceeding more than 50,000 crore rupees. What are the new launches that you have in the pipeline for attracting newer customers, as also getting in more money from existing unit holders?
See, the USP of this company has always been that we have got a set of products we have got one of the largest product suite in the AMC industry. So this large product suite ensures that I have got, and these products have been given to different fund managers that manage money in different styles. So when value does well, some of my customers do, some of my funds do well. When growth is doing well, other set of my products do well. Then we have specialized in another thing which is called as dynamic asset allocation. Whenever our fund managers are talking on your channel, we always talk about balance advantage fund, multi-asset fund, etc., etc., which mix equity and debt. So in a year like this, when equity has not given much return from September 24 to September 25, still those kind of funds which mixed equity, debt and metals has given decent performance to the customer, anywhere ranging between 5% and 9%. So I'm saying there is an existing suite of products which is the largest in the industry. We are coming up, SEBI has come up with guidelines of SIF. We have got 2 or 3 launches that will happen in the near future, where we'll start nurturing our SIF product suite. Typically, what happens? You come up with the NFO, you get some money into it, you nurture the product, you see the customer sees good. If customer sees returns coming into it as per his expectation, then the product starts building. So it's not launches which give you money. More than launches, you curate the products that you launched 3 years back. It sees good performance and people start coming investing in it. So typically we see that after 3 years of performance, people invest money. So we have got our launches coming up in the next 6 months, but that launches won't change my profitability or anything anyway. What I did 3 years back, 5 years back, and what shows as good fund performance will get me money. Today, I'll get money not because I'm launching new products. I'll get money because 90% of my AUM, or I expect to get money because 90% of my AUM has beaten the benchmark. Our dharma is to benchmark, and fund performance is what? SEBI has created a very beautiful product that if you've got fund performance, you get money. You can have the best sales and distribution network in the country, but if your fund is not performing, if you're not doing well for the customer, you cannot get money. Right? So ultimately, the risk is whether our funds are performing well or not.
Yes. And I think on that metric alone, ICICI Pru has overshot many of its peers as also individual products by a very, very wide margin. This is all documented data and is easily available. Mr. Shah, you alluded to the very high dividend payout which the company has given over the past several years. Is this a structure that is going to continue in your listed frame as well?
See, we don't need, as the beauty of this business is that we don't need capital, right? So I don't need, even today, I have got capital where more than sufficient capital we have got. We don't need to add on to that capital. So we always believe that the board of directors would always recommend a dividend which can be very high as a percentage of profit. In our RHP, let me be very clear with your, in our RHP, we have said that we endeavor that minimum 60% dividend we should, of whatever we earn of the profit, we should pay back as dividend. But historically, we have paid more than 75%. And there is no reason to change it.
Okay, let's look at the risks that you've highlighted in terms of legal issues facing the AMC, which is a part of the business, which according to you would be the highest risk that is stacked up against the AMC.
See, an AMC does well if it is investment does well. The biggest risk in an AMC is always if the fund performance is not up to the mark, then there is a problem. Right? There clearly customers will give money only to products which has done well and which has given him in the past good return. It's very commonsensical that if you have good experience with in a fund, typically you tend to invest in the same fund again. So it's so that's the risk in this business. So how we are managing that risk? As I told you earlier, we have got different products, been different managed in different styles. So in some market environment, value style will do well. In some market environment, growth style will do well. In some environment, say quality style will do very well. So different fund, I've got 15 fund managers managing money in different ways. So I believe that we will be able to manage that risk. But yes, there is a risk that if the funds don't do well, you don't get that kind of sales.
Yes, I think the cornerstone of the AMC business is, fund returns. If they are good, then everything else can be managed.
Only a investment centric AMC survives in the long term. So basically, if you are investment centric, the main business, see, I'm saying I've got a brand like ICICI behind me. I've got the whole product suite. I've got distribution in the country. So that part is given. Now, the essential thing is that if my funds, and I've got an advantage, having a very strong brand, pressure on my fund manager is not to be in the top decile or top quartile or anything like that. Our dharma is to beat. We set up processes that we endeavor that we all our effort should be to beat benchmark, right? You're paying me fees to beat benchmark, and that's what I should be doing. And there is a huge probability that if you are consistently beating benchmark, some of your funds will be in the top quartiles. So that's what we endeavor for.
Absolutely. I think time and again, this has been proved. There is absolutely no doubt in my mind on this one. The other, Mr. Shah, thread that is running in the mutual fund industry is the incoming age of index and passive funds, which essentially means lower regulatory and management fee for AMCs such as yours. Is this not exactly a pain point, but is this something that worries you, that people might move into index funds from equity diversified, where obviously you get a higher margin?
Actually, my earlier answer led to this question. So the earlier answer was that if I'm beating benchmark, right? My business is to beat benchmark, and 90% of my funds are beating benchmark. So I am into business. So if my funds don't beat benchmark, then passives in this country will grow, right? Then yes, there is a threat. So when I said that performance can be a threat, the threat can be from passive also, right? That if I do, but when will passives grow? When will you tell your, I'm sure you're doing personal finance programs on your channel. And when you do that, if my active funds are not beating benchmark, you will tell your viewers to look at passive funds and not look at active funds. So essentially, I have come back to the same point that I said earlier. Whether passives or any other risk, it comes down to whether your funds are beating benchmark or not. So as long as we are beating benchmark, we are in business. If we are not beating benchmark, we'll have serious issues. Right. That is the risk.
Right. And Mr. Shah, before we bid you goodbye, my final question to you, sir. The last 5 years have been, the golden period of mutual funds in terms of returns, in terms of participation by retail investors, and in terms of the ease of doing business. How do you see your industry 10 years from now?
Ease of doing business, so SEBI has created all that by doing digital and all. So ease of doing business is there. But why are you saying 5 years? Look at, as far as fund performance is concerned, look at 10 years, look at 15 years, look at 20 years. Some of our funds have given more than 20% CAGR over 20 years. So I think in summation, I would say that SEBI has created a brilliant product which is good for the final investor. It has become a pull product rather than a push product. And if we are able to manage our investment performance such that we beat benchmarks, then this business can grow, because young Indian wants to invest in capital markets digitally or physically. He wants to invest in capital markets, and there is an infinite market out there in terms of traditional products. And if we have a better value proposition, which I believe that we have, market is infinite. Even the bank deposits in this country are 230 lakh crores. Right. So we are only 1/3 of the banking industry. I feel we have just started our journey, and banking industry itself is growing at 10%.
Right. The very best to you, Mr. Shah. We look forward to interacting with you every quarter on Pru AMC's eventual listing. I'm sure
ICICI Prudential AMC.
ICICI Prudential AMC, yes. And we hope that you get a good pop-up, and then just as shareholders have enjoyed, just as unit holders have enjoyed a very good time at ICICI Pru AMC, may the shareholders also enjoy the same wonderful ride. Thank you for your time and best of luck.
Thank you. Thank you.
That, ladies and gentlemen, was Mr. Nimesh Shah, MD and CEO at ICICI Pru Asset Management Company, whose IPO, whose OFS opens for subscription on December 12th. Thank you for watching.
For me, good journalism is the truth well told. My philosophy was produce a